Hey traders, Spartan from SpartanTrading.com, and I want to bring you guys my new quarterly in-depth analysis. But first, let's do a quick little recap of the last one and why you guys should actually care to watch this video. Now, the last quarterly pick that I had was Cybin. Now, Cybin was a psilocybin company, and still is, company that we got in based off of their studies that were coming up, their management team, and basically what they had in their pipeline. Now, this is a company that I spent a few months doing due diligence on, talked to the management team, looked at their phase 2 studies in depth, and essentially I found that this company was undervalued from where it was. We ended up grabbing this around 26 cents. It immediately ran to 52, ended up taking some profit, came back to 30 cents. We ended up adding back into that position. 0.72 came in, took a big stake, which, pat on myself on the back on that one. I clearly had the right idea. It ran to around 73 cents, 72 cents there. We ended up taking some off and then adding back around that 50 MA for a bounce back to 72 cents. And we'll be revisiting that name again as more catalysts come up. But overall, ended up being, 100%, about 160%, and then another 70% trade, all in one go. So really fantastic idea. These guys, we'll be watching them going forward because they're well capitalized right now. But, why should you guys care? Well, the last pick I did extremely well. So let's talk about this pick, guys. And this is my new quarterly in-depth analysis, disseminated for ATHA Energy Corp. And this is something that I've spent a lot of time doing due diligence on. Now, the sector, I've been looking for, different sectors going into next year. And what I found was the uranium sector is something that I believe can become explosive over the course of time in the next 1 to 10 years, I would say. And this company at the moment is extremely undervalued from what I see compared to its peers. And let me go into depth as to why that is. Now, I had the pleasure again of speaking with the management team. I had the pleasure of understanding exactly what was going on, how they're positioned. One of the best things that you can do when you're doing due diligence on a company, guys, is actually get into the heads of the management and who actually is doing the operations for the company, etc. If you get to know them, you get to understand the story better, and when you understand the story better, you can make a more informed decision. Uranium is something that by no means I am an expert on, but I did start to look at uranium companies just based off of the technical chart. We're breaking out of a weekly range that we've been stuck within for 10 years. Clearly, we got a ton of room to the upside. It's blue skies for a while. And then just looking at the macro environment, you can see that it makes sense to start looking at this sector. Now, this is one of the companies that I've looked at. This is the best company, in my opinion, out there from a valuation standpoint, the way that they're positioned with their assets and the way that the management team is made up for future growth. Now, let's go into depth as to why I like this company. Let's start with the macroeconomics. So from a macroeconomic standpoint, first and foremost, at the moment in the market, there's a 26% production deficit in uranium. And what that means is as the deficit is set to grow by 2040, this demand is going to need to be filled. What does this do to the spot price? Well, since 2016, it's raised 175%. I expect that to increase as the gap widens. And you're going to be looking at a lot of different new companies that arise, that are exploration, that are production companies, etc., that are going to be there to try to fill that deficit. Now, I think it's at a point where it's gotten too large. So I do believe that it's just going to be a law of supply and demand here, where you're going to see an increase in the price, the spot price of uranium, meaning that companies like ATHA will make more money, have increased margins as that commodity price increases. The other thing is the net zero energy emission strategy that most countries are taking right now. It stands that at the moment, nuclear energy is the most efficient and the safest way of producing energy. So it would make sense that most countries going forward are going to try to adopt some form of nuclear energy. And obviously, as that happens, then the demand deficit just increases that much more. Global nuclear energy in the past was, something that was scary. But as more and more individuals are being educated, especially the public within these countries, more likely we're going to see these projects get approved. And we're going to see, again, from that demand increase. So this is primed for explosive growth. Now, let's take a look at a few other things, which we're going to be looking at the operational strengths, the management team, as well as how well this company's capitalization is and what they look like from a share structure standpoint. Now, when we're talking about operational strengths, we got to talk about the Athabasca Basin, which is where these guys are located. Now, Athabasca Basin is home to the largest and highest grade uranium deposits in the world. Meaning, if you have a very high uranium deposit, it's going to take a lot less in the extraction process to extract more uranium. Again, this means an improved amount of efficiency, and their margins as a result will be affected positively. The jurisdictional support in Saskatchewan is fantastic as well. This province in Canada is completely behind the production of uranium and the mining of uranium, meaning they have no hurdles to jump through. So if they're going to be acquiring other projects, it's going to happen quickly. If they're going to be looking at other dig sites, it's going to be happening. There are going to be approvals quicker. There's going to be a lot less hoops to jump through. When you have the support of the government, it means everything within these projects, guys. Exploration potential obviously is huge as well. And ATHA distinguishes itself by operating in an exploration-rich environment, and they actually, at this moment, hold the largest exploration portfolio in Canada. Now, we'll get through that in a little bit later, but let's move on to the management team. So the one thing I love about the management, and this is fairly rare to find in an exploration company in the mining sector, is these guys are a mixture of experts within their technical field as well as market capitalization experts. So the capital experts here are huge because that's going to ensure that the company is well capitalized, the story's put out correctly, and that these guys are going after the right, let's say, institutions to get funding or, for, let's say further uplisting going forward. That's extremely important to have those types of connections. Usually there's a huge disconnect between the management team and the market just because they don't know how to communicate what they're actually doing well enough. But not the case here. The technical experts as well inside of ATHA are some of the best tenured people in the industry because they are coming from some of the biggest companies. If you look at Cameco, which has, I believe, a $25 billion market cap, and NextGen, which has a $4.3 billion market cap, we have individuals that have worked for both companies within this smaller name. And when you have very strong management, the ability to grow from a successful standpoint is much higher. The probability that these guys have of being successful because they've been there before and they know the industry like the back of their hand is and cannot be overstated. So that in itself is huge. The strategic assets and financial flexibility of the company is fantastic. Like I said, they hold 3.4 million acres across 4 exploration districts. And this, coupled with financial flexibility, positions the company to leverage modern technology and pursue strategic opportunities, including farm outs and mergers and acquisitions, which currently they're in one right now, or in the middle of one right now. So let's take a look at the actual discovery strategy. Now, the way that they're actually going about acquiring the actual mine sites is they go through a process to find the highest probability that there will be a high-grade uranium deposit there. So they look at historical data, they do the geophysical survey, the geochemical processing, 3D modeling and analysis, and then they go to the allocation process. The one thing that I love that these guys are doing is they're positioning themselves alongside some of the highest grade sites already. If we take a look at this map, we can kind of see how around the Athabasca Basin, how much land they actually own. And, you can see, beside NextGen, that they've already picked plots that are near to these higher grade uranium deposits that have been found in the past. And that gives them a higher probability of finding, something within those assets as well. Now, if we look at the actual valuation, there's a huge disparity in my opinion. Now, ATHA, if we look at it, and let's just for ease sake, look at it on the Canadian side, just because all these numbers on the Canadian dollar side. The enterprise value of ATHA right now, I believe it's 114 million is what we have here. We compare that to every single competitor. Let's compare it to F3 Uranium, for instance, which has 144 million enterprise value and only holds 500,000 acres, whereas ATHA holds 3.3 million. So right there's a huge disparity between the assets they hold and their valuation. The nice thing about ATHA as well, because they're well capitalized, because they're a newer company, they don't hold substantial amounts of debt that the other companies do hold. The proposed acquisition between 92 Energy and Latitude Uranium will make them the largest exploration portfolio in Canada. And if these larger companies like, let's say, Cameco or NextGen is looking to get into the exploration sector, or you have a larger company from the States in the mining industry looking to get into the sector, ATHA would be a prime takeout target because the way that they're positioned, and like I said, the valuation of the company, in my opinion, is extremely low compared to their peers. So if you compare their valuation, it's very apparent that there's a big gap here, and there's definitely some arbitrage to be made. Now, lastly, I want to talk about my opinion in regards to the price targets on the stock, my opinion, Spartan Trading's opinion on where I think the stock can go, etc. And I think it's a very bullish looking chart from what I've seen. So the great thing about ATHA, and if you take a look at SASKF, let's take a look at the chart and do some technicals here. We got in around this area, guys, by the way, December 7th. We've done a couple ads. I think right now is probably the time you'd want to get into it from a technical standpoint, just because it's broken that consolidative base here. But you've reclaimed all EMA support. You've had a great amount of consolidation here. You're finally breaking above that level. You're holding. You get a nice flag to the upside. And we technically have room right away to around the $1 mark. We break through that, we're going to be quickly through this resistance level at 107 and into that recent range high of 137. Now, I believe that level is going to be able to be taken out, and we should see further continuation to the upside. I'm looking for around 100 to 150% from this area to the upside in the next 6 to 12 months. And I think if you do see any sort of chatter in regards to a potential M&A or maybe a buyout, obviously that's going to speed that process up quite a bit. This company, in my opinion, isn't well known right now, and that's why I'm giving you guys this insight into this hidden gem, in my opinion, because once the demand starts to come into the stock, you're going to see the price rise quite quickly. And that brings me to my last point, guys. The way that the company is structured from a share standpoint. Now, the shares are tightly held. You have insiders that own 46% of the float, and the other 25%, and the institutions that own the other 25% of the float. A little bit of demand comes in. It's not going to take a lot for this company to move. And because it's a newer company, a lot of these insiders are still locked up. And because also it's a newer company, these guys are not going to want to sell for a while until that actual valuation gets to a point where it makes sense to do so. When you have capital market experts within the stock, they know that if you combine a lot of strategic assets into something, that value is going to take some time to build. And once it gets to that point where, it makes sense to actually start selling, they're going to do so. They're not going to get in front of it, in my opinion, because of that. Again, just my opinion, just the way that I think, et cetera, et cetera. So current idea, guys, 2 to 6 months, I'm looking for basically a 100% to 150% move. This is something that is really exciting to me. I think it's a prime name to get in if you're looking for anything on the uranium sector or just a smaller cap play that is undervalued and should be a gradual mover to the upside going forward. Take a look at it, guys. My thesis, if you go to SpartanTrading.com, is under About and Trading Resources. Give it a read. There's a ton of information here. And if you guys do have any questions, feel free to reach out, SpartanTrading.com. Stay tuned for some more quarterly in-depth analysis. If you guys aren't on our newsletter, go to the website, click on the newswire, or not the newsletter there, sign up. We do send out newsletters every single week for free as well. You can join our room, et cetera, et cetera. Thanks for watching, my friends. If you guys have any questions, reach out and comment below.